Can you hear me now? It should be a bit better now. Sorry, I had the wrong audio feed on. Video looks okay. So hopefully everything's okay. Let me just open up. We had a problem earlier in the week with this one, but let me just check that's going to be okay. Hope you well. You can see the chart there. That's gold. We're new all-time high yet again this morning. I did our weekly video late last night, and we were over 4,200. We were obviously still moving up yesterday afternoon, but we hadn't got to 4,300. 4,380 we got to this morning. Jitters really very much about the US banking sector. I remember a couple of years ago, Silicon Bank went bust, and that rippled through the markets. If we look at the, let me show you the FinViz screenshot for last night. We just look at the spread here. Look at the financials. Remember, we had really strong returns for the big Wall Street banks, but it's the second tier regional banks which are proving a bit of a worry, and the financials had a big worry yesterday. This one here, Zion Bancorp, a US regional bank, lost 13% yesterday. Western Alliance lost 10% yesterday. Big worry that's rippling out. We got some more regional banks reporting later today. So that wobbled the stock markets, which is already, I should say, not always, but already very richly valued. So we come off less than 0.5% on NASDAQ, 0.6 of 1%, you can see there on the S&P 500. But we closed it was enough for me to close our long position on the NASDAQ, which we've taken the night before. I'll update all our positions for the end of the week. We've had a terrible week, to be honest. That big DAX lost 500 odd points. Most of our Forex trades have been positive, though. In fact, all of them have been positive. It's just that huge DAX loss, 2.3% on the DAX last week, and we've lost on the NASDAQ as well. But so I'll update everyone later on. So here we are. It is 7:37 here in London, 6:37 Universal Standard Time. It's Friday. So those of you that have put in a request to have a payment paid from your funded account, that will get processed today. Don't panic, guys. Be patient. The guys are just getting to, they've been at work a while now, but they're just getting to process all of that. So the best of luck with all of that. Let me just check my live feed that sounds okay. That it sounds okay. I can't actually hear myself. Yeah, that sounds all right. Okay, right, let's crack on. So there's gold, all-time highs. Here, 15-minute chart is big shakeout as we'd come back down to 4,300. But clearly, in the early hours here in the Asian session, we had a buy back and off we went again. The worry on the stock markets, the Asian markets are down. The futures in the US are also down, and the futures in Europe, which is what we're here to have a look at, are also down. So let's have a quick look at the indices. We'll have a look at everything else in a minute. The DAX, we took a long position earlier this morning, about 640. We retraced here. Actually, that's a 15-minute chart. You can see that's still very much a down trend, trying to move up here, but it's not happening. The trend is overtaking the mean reverting strategy here. So we're down, false rallies, down. So as I say, we're down into the open at the moment. So I'll just take a quick sip of this. So if we just put on where we were this morning, our high for the day is round about where our stop loss level is there. See, there's the beginning of close of yesterday. There's our high, and our low of the day. So we'll just use that line. Our low of the day pre-market is just being put in now here at when we actually bought it here, 6:30. I'll show you the long position I took earlier this morning, 640 on the five. Remember, we use this 5-minute chart as a mean reverting strategy, looking for a touch of the outside of the Bollinger Band, and then across of the stochastic. So the stochastic last crossed here that we touched. There we are. It's a bit bigger. We touched the outside of the Bollinger Band back here at 6 o'clock. Down we went, and we got across to the upside here, or it touched here. It wasn't confirmed till here at 6:40. So we took a long position from here at 23,920. We got filled. First target is the midline of the Bollinger Band, which we got hit. Next target would have been the other side of the Bollinger Band. That hasn't happened. Our stop loss was originally there. As this moved up to here, I dragged it up a little bit to this top here to try and ramp something because we lost yesterday. Remember on the we just left it, didn't we, on the Dow yesterday, and then that's taken us out there. So that's profit one. Profit two is from here to here. So we're out on that and now looking for a long position again, but we may obviously run out of steam because the trend, the trend remains down. The 5-minute trend is still down. We're still in the underside of the moving average. So what you could have done then is take that when we've crossed back into the underside of the Bollinger Band, and the stochastic has crossed again. So that rally, that buying here has been bought back, and so you could have taken another short there and target back to there. That isn't part of the strategy, but you can see because the trend is so strong to the downside, you go with the flow, you go with the trend. Remember what we were saying at our scalping strategy. The trend can be persistent. So we've made a winning trade going down, and now we would have had a winning trade going short. But technically, this strategy is now waiting for this, the blue and the orange line to cross, the blue back over the orange, the K back over the D, and off we go to the upside if that happens. Let's have a quick look elsewhere. I'll say the US markets are down. So the Nasdaq, let's go to the hourly chart. We saw the closing prices yesterday. So we've been down all afternoon into the close. We got out on close last night, our long position, and we've been down during the Asian session. Next level is 23,400 or 23,380 from when was that? 14th. That was Tuesday, wasn't it? Tuesday. And then not forgetting this Friday hiatus, we went down. Interesting though, that if I'm just showing this, I mentioned this in the webinars yesterday and in our video I did yesterday. That was Friday's big shakeout following Trump's tweet about more tariffs on China. But we'd recovered, up to the 78 fib level before we went back down yesterday. Interestingly, we were over the 50% shakeout. So that could be an upside target today if we stop moving down. But at the moment, we've just broken back through these fib levels and we've stalled now as I speak at the 38.2. So as I say, we can't rule out last Friday's low. That might be just the first peak down 24,000. Big psychological support level on the Nasdaq 100 there as well. So I say we had recovered well over the key fib level yesterday, and that was looking pretty good. Those regional banks was enough to spook things round about the close of the UK markets, the German markets yesterday, when that data came out for that Zion Bank. I know it's only one bank, but there's the gossip has sort of been building. The other key thing that happened around about 4:00 yesterday was that the 10-year US Treasury yield went back under 4%. Remember, that's been a key driver of the dollar. We went back under 4% for the first time since April, and that's rippled through markets as well. So although stocks have got off to a great start this week, the earnings season got off to a great start this week with the big Wall Street banks, the weaker, smaller banks. Obviously, the market's twitching a wee bit about that. And this massive, these eye-watering investments for the huge players is obviously not filtering through to some of the other members of the wider, broader US economy. Obviously, the Fed will come to the rescue, will cut rates. It's nailed on that October and December. But last time we looked earlier in the week, it was 99% for both of them. We'll have a look at them as well in a minute, because this remains to the downside. So that's very much short position today for the stock market, Nasdaq. Let's quick flip back to the DAX. What's that? That's that low. The day's been extended, hasn't it? 23,900. Is that going to be a support area? Doesn't look like it on that, does it? The only positive is that we've come in from the edge of the Bollinger Band, so we may be finding some sort of support here on the hourly chart. Well, it's trying to move up as well, isn't it? That was our shorter 5-minute term, but we've not yet happened. If we go down to our trading time frame, the 5-minute, it's still moving lower, and the 323,900 looks like it's going to get tested again during the opening session, which takes place in about 50 minutes. Excuse me, I've got itchy back. Guys, if there's anything you want to have a look at, any particular asset, let me know. It's all very quiet here. Hang on, somebody's Aldo's job. Let's go. Morning, Aldo. Why on earth are you up, my friend? Go to bed. Aldo he's in Mexico. He's a guy that worked with me a few years ago. So go to bed, young man. Or are you trading? Are you short? Hopefully you long gold and short the dollar, the indexes. So good morning, Aldo. Hope you are well. Where else are we? If we look across the English Channel to London here, same pattern as you might expect. 5-minute chart down. We had a similar. I don't trade the FTSE, to be honest. We had a similar rally for the FTSE there at 640, as we saw with the DAX. I prefer the DAX. I've always preferred the DAX for some reason. I think the fact that the UK, although it's 100 stocks, is bigger. It's more representative of the UK economy. And it moves quite in tandem with the S&P. That was some of the early research I did. In fact, that wouldn't have triggered there, guys. I wouldn't have got into layer on that one, because that cross there, you can see that's obviously it's touched here, but that wouldn't have transpired until the following couple of minutes later on. So there we go. So off we go, and then again, similar to the DAX, but not as effective. You see, we didn't quite. Oh, we did get to the first target. Stop loss would have been there, would have been stopped out immediately, having got to first target. And then that's a similar sort of pattern of rejection of the 20 period. So you would have got short there again, but again, too late. It's already touched the outside. So, but that's still short, but that's now ticked up. So that, in fact, would have here at 740, would have got the system would have triggered, if you'd been trading that, would have triggered a long position on that weak cross there, you see on the FTSE. The DAX hasn't done that, I don't think. So a quick look. DAX out, it's touched the outside. Now we're still, see the downs trend is there. We are. We've touched that 23,900 as we go into the open. Still very much to the downside on the stochastics there for the DAX. Another reason I not trade the FTSE, I prefer the DAX on a short-term basis. The Dow was the other one. Tends to be the DAX and the Dow. Similar pattern there. Here, there's the downtrend. Actually, the cross took place there, didn't it? That would have failed move up. That would have stopped you out. We've done it again there, and confirmation there really as we're coming out of the. As we're coming out, actually, zoom that in. You can see there's the. Oops, get out of the way. Make that a bit bigger. There's the you can't really see it. There's that cross. It's failed. It's gone up. So your stop loss would have been down here somewhere. That would have taken it out there. So it's still going down, but this is moving up. So we've got a bit of divergence. Always interesting. So there we got the cross there. We're back out, and that would have been your entry. First target there, 45,780. And then we've done exactly the same thing. We've rejected the 20 period, and that would have been. That's short from that one there, and we're still moving down. So the Dow and the DAX in unison, short from that 720 into the European Open in a minute. So a quick look elsewhere. We're 10 minutes before the Open, so let's have a quick wrap up of where we are elsewhere. Bitcoin, 106,000, so that 110,000 it was struggling with yesterday has given up as well. So the 100,000 level we went to last Friday and over the weekend cannot be ruled out this weekend or as we go forward again. If we look at actually, let's check this to the daily time frame. I'm sure a lot of you trade the cryptos a lot more than I do. But let's have a look. There we are. So this rally we had last week to 126,000 has been shaken out really aggressively. Friday's worry following Trump's tweet, and then the hiatus we had over the weekend where we went down into the 100,000 zone, 101,800. Has looked like it was getting bought back on Monday and Tuesday, but since then turned around, and significant big-bodied candles this move we've had, and it's biased to the downside. So look at the size of the bodies of the red candles to the downside. In the under half of the Bollinger Bands, the MACD and the sorry. The K and the D line on the fast stochastic. Remember, it's 10.63. My settings for the stochastics. Thank you, Andrew Neil. Not Andrew Neil. Trevor. Trevor Neil. Sorry. Down we go, and we're at 106,600 at the moment. Potential support-ish area, but it doesn't look like it technically, does it? We're under this 107 area. We're in a bit of a previous pivot area. This takes us back to June, where we were sort of sliding sideways through that 106, 107,000. But that's not looking good for crypto today, and it hasn't looked great all week. So down we go. Oil market still can't find a floor. 57.16 this morning. So oil down again, and we had some shorts earlier towards the end of September. I haven't actually traded it since, but we are just collapsing. That key $58 has been breached. That's a bit of a news of the day. The key $58 support area for WTI has been breached, and we can see the intraday low we got to here in beginning of May, and at the beginning of April, wasn't it? Yeah, it took us to 55.40. So history repeats itself, my friends. Another weak day for oil. So WTI down 57.14. And Brent, the global benchmark, Brent is heading under $60 as well at the moment. 61 has been breached this morning, 60.95 at the moment. The trend is very much to the downside. Obviously, with your oversold area here as far as the stochastic is concerned, but as you can see there, on this daily time frame, using our the crossing nature of the K and the D line, we last crossed was to the downside, even in an overbought area. So oil has had a weak week, and it's looking one of its worst weeks for a long time. We just flipped this to the weekly chart. You can see what a bad few weeks we've had for oil. So nearly as bad as next week, not perhaps as bad as the end of September, but a big move down for October. And there's that 59.88 low for Brent on an end of week basis, which was that 5th of May week, and the intra week on the intraday lows took us to 58.75. So 58 also for the downside for Brent. So oil very much under cosh, gold and silver going in the opposite direction. The impact on the dollar has been quite significant. We rallied significantly last week, but we've given up more than half of the gains we had last week. We look at the Swissy as an example. This is the weekly chart. We've got the daily chart again. Big down, well, actually, you start with the weekly. A huge down week engulfing all this previous sort of sideways action. Last significantly positive week at the end of July. Drifting lower. It's been the best performer against the dollar this year. Go back to the beginning of the year, all the way up here at 92, and we're down here under 79 again this morning. So if we just come down to the hourly trade, you can see a weaker dollar. Sorry, I was going to talk about the week, wasn't I? There's the weekly dollar down. There's the rally we had last week, and then 1, 2, 3, 4. So we were up on Monday. But since then, we've turned around, and it's been a very significant move lower under the 20-day moving average. On Wednesday, down again yesterday, and down again today. Next stop is this low here from the middle of September, which took us to 78.60 zone for the Swissy. And I'm just using the Swissy as an example of the weaker dollar. Yen 140. 960. So the significant hugely psychological 150 has been breached from a 153 high last week. Again, very much like the Swiss franc, very much in demand. The uncertainty about the new prime minister continues to rattle, but that's helped the yen as the Nikkei went to all-time highs earlier this week, along with the other stock markets, then since rolled over, and the yen's improved on the uncertainty about the new Japan's first female prime minister, very much back to where we were on that Monday when she won the when she won the nomination of the Liberal Conservative Liberal Party in Japan. So 150 has been breached. That's the news of the day for dollar yen, and the 20-day is also breached for the first time since her appointment looked like it was just a matter of her being appointed or inaugurated, but it hasn't happened. There's been fallouts within the party, so she needs to get the leadership before she can get put in as prime minister. So it still will probably happen. It's just obviously a bit of a hiccup. So dollar yen's come back a bit, and we're under 150 again. Dollar CAD 140.50. That did go to 140.80 earlier in the week. We were still long that, and we're over 140. So the loonie is even weaker than the yen, than the dollar. You can see there, and we've had some good moves for our CAD trades. We're pound CAD, Euro CAD this week, Euro CAD again this week. All very much in the money. So the CAD is one of the weakest this week, but so the dollar's holding up there over the key 140 level. That's our stop loss, wasn't it, from earlier in the week? 40.26 we got taken out, I think, yesterday or the day before. So yeah, that continues to move to the upside. Euro. Well, back to the hugely significant 117. Remember that 117 area we're pivoting around all week. Another strong day for a weekday for the dollar, really. You see this 4-day pattern we've seen. So I'll say the gain we had last week has more or less all been wiped out. Yesterday when I was doing our weekly video, yesterday when I was saying about how much the gold had a new all-time high over 4,200, and here we are, in less than 24 hours. 24 hours later, or less than 24 hours later, 15 hours later, we are back at where we were at the beginning of last week. So we said we'd given back more than 50%. We've given back well over nearly 80% of the gains we had last week for the dollar. So euro back to the hugely psychological 117. Let's see where we finish today. We are currently back over the 20-day moving average into the upper half of the Bollinger Band. The MACD's crossed here. So if you're using this on the daily time frame, you'd have been long on this strategy here from Wednesday the 15th from 116.49. Your stop loss is still, well, you might have pulled up a wee bit. Probably at the bottom of the candle have you entered now, because it would have been down here on the turn. And off we go. First target's been hit at 116.87. So we got in at 50, so 35 pips, something like that. And off we go. You can see there's a bit of a struggle through there at 117.50 is the next resistance for euro on this daily time frame. But quite a strong move up there for the stochastics to gain the D line. So euro bid, dollar weak. Aussie hasn't quite got back to 65, still looks weak. So the Aussie, the Canadian, and the Kiwi remain the weakest of the main currencies. So dollar holding up against the Antipodeans and the loonie, 64.70 for the Aussie. The Kiwi similar, 57.30. Back to this 57.20. Yeah, we had a couple of Kiwi trades as well, didn't we? I think we had Aussie Kiwi as well at one point. Right, let's flip back to the indexes as we come to the opening of the European session. So the DAX, there we are, very much down for the week. So, that's the trade you want to be looking at, certainly on the hourly and the 4-hourly. Big down candle. Now there's that 23,900, our pre-market lows of being pushed even lower, as we suggested it may be. And let's have a look for a 5-minute. Have we seen any turnaround? No, the trend remains very much to the downside. So if we had taken this this cross here, obviously target 1 would have been hit as we'd hit the outside of the Bollinger Band there. But again, if the other way of trading with this is wait for the body of the candle to close on or below the lower Bollinger Band, and it hasn't actually done that. So you'd still be short this. We'd still be rolling our stop loss down. Stop loss now would be at the previous pre-market low 3.9, and there we go. We're going lower again. So we're looking for this to turn around potentially. This mean reverting strategy here on this 5-minute time frame. But as the cash market opens, the momentum has continued to the downside. So that's not helping. So pre-market buys or sells that are in the grey market that goes around the stock markets before the real cash deals can be completed. So some off the book trades were still to the short side. So our immediate move low. Let me just put this. So that was our pre-market low. Our opening low has taken us to 23,850, 855. So. On the DAX. So the trends is very much down here, and even on this 5-minute time frame. And we just go back to the 2-minute with a similar pattern, a bit more bouncing up, but still big move down. And the minute time frame. If you want to trade that shot, there we are. You can see, the trend is very much to the downside from 7 o'clock today. See that 6.55 high, but and a bit of a bounce, weak bounce, bit of a bounce there. But interestingly, the bit of divergence there on the MACD, but on the stochastic. But this really is the 1 minute tick time frame. So the trend remains to the downside. Although there's some suggestion that we may. No, there isn't. That was that move up there. That we're moving down again. This is going to turn around again. So. Just hang by either add to your short position on here or indeed close it out, because we have now closed under the here just the 755. We actually closed under the Bollinger, just about on it, didn't we? But if this unless this moves down even lower on the completion of this, we'd still have that short position open on the DAX. The FTSE's probably done exactly the same thing. Indeed, it has. There's that, and there's that cross to go lower again. And it's moved even lower. Interesting. There's much more positivity on the FTSE. We went back to its 5-minute, 20 period moving average. So not as aggressive to the downside as the DAX this morning. The Dow, how that's been interpreted by the European Open hasn't really, has it? There's 8 o'clock. Sorry, this is the 8 o'clock 5-minute candle, isn't it? We only just opened up. There's the 8 o'clock candle to the downside, and we continue to unwind. The trend is very much to the downside. So we have Friday, we have a weaker dollar, we have gold at all-time highs over 3,300. Got my fours and my threes the wrong way around. Weaker dollar, gold, weaker oil markets that we've just seen, and weaker indices on the back of the potential worry about US second-tier banks, the regional banks, which Zios led the charge lower yesterday. See if by the time the US opens later on today, see if that has cooled down a wee bit. But the other key thing to watch is the 10-year yield. Are we going to go back over 4%? We are under 4% for the first time in a long time. And I'm just looking at the Bloomberg TV here, and the dollar index is down 8% year to date. The Bloomberg US dollar index is down 7.9% year to date. So dollar remains under pressure. And that little rally we had last week, we did talk about it last week, didn't we? It was just a reverse, sort of a retrace of the longer, higher time frame trend as we moved down for the dollar. And there we go, the FTSE now. Sorry, this is the Dow extending the falls to the downside, 45,645. The DAX is that big low, new lows, 23,815 now. So the move to the downside. Lots of, obviously, chatter we saw yesterday from central bankers as well. Let me just have a look at I'll show you the calendar for today and yesterday. There was obviously the IMF meetings this weekend as well. I should cut today. So sorry, it's got all the other countries on. We got European inflation in an hour or two. Nagel speaking, head of the German central bank. Pill, the chief economist at the Bank of England, speaking later. As Nagel again, and then we had Miss Lagarde yesterday. We had Chris Waller talking about careful cuts. Let's have a quick look at the what the CME tool is showing us with regard to expectations for rate cuts in the United States. So remember, this is a very public, free site, so it's not without its issues, but it's the best we have as a free site. So you can see here for the October, this month's meeting, the 29th of October, it's come down a wee bit. It was at 19.8, I think, earlier in the week. 96.8%, 97% chance of a 25 basis point cut, and a 3% chance, that's interesting, of a full 50 basis point cut in less than 2 weeks. It's interesting. That's the highest it's been for a lot of, there we go. So that's part of the panic. 3.2% chance of a 25 basis point cut, 96% chance of a 50% basis point cut, 25% chance, 25 basis points, 96.8. But you see, it's been nailed on for well over a month now. Well over 90%. A month ago it was 87. So yeah, definitely on. And the chance of it not being cut a month ago was 12%. There's absolutely no chance of it now. In a couple of weeks' time, as we get closer to the decision. And I went for the final decision for 2025, 10th of December, 80% chance. That's come down quite significantly as well. And a 20% chance now, wow, of a 20% of a 20% cut. So a 50 basis point cut. So quite a significant move lower. Look at 100 basis points, 20% cut. So yeah, that has ramped up quite significantly. Again, big changes based literally on yesterday's and the worry about the bank. So that could indeed be the trigger that the markets have been waiting for a bit of a cooling. So we could see a very volatile, a very negative Friday potentially. That's a very significant number as the 10-year Treasury yield comes under 4% again as well. That's a really, really significant number, 19.4%. So big bets now on some significant cuts at the December meeting. So wow, that's really a big surprise from yesterday on the back of that. So hence the weakness in markets. So I wouldn't be buying. I wouldn't be trying to catch the bottom of this one anytime soon, my friend. So the DAX first 10 minutes, big move lower to the downside. Dow also moving down. S&P. That was I'll start with the Nasdaq at the top of the shop. Trend lower. We just got the hourly chart. There we go. Moving down. Remember, this is a mean reverting strategy, lads. We're looking for a turn in the market, but the trend is very much. We just flip this hourly back to the crossing EMA strategy. You can see, it's very much trend bound. There's the 20 period moving average, 21 EMA, the blue and the pink, the 5 and the 9 here on the hourly. So we have this top here, classic pivot turn here this morning here on this 5-minute chart, and that's absolute fantastic little faded rally up from the 24,450 for 15 minutes. Didn't get anywhere, failed move up, stopped out immediately, and thank you very much, and just shorted that and stay and drilling your stop loss down. Stop loss will be down here now. Keep it tight. Look at these nicely aligned moving averages: the 21, the 5, and the 9. Sorry, the 21, the 9, and the 5, I should say, to the downside, and down we go. Stop loss here now, below the 9, because we're just bagging the pips. And see what happened there as we went through. There's that support earlier, 640. Remember, we had that long up, and then it's moved down. And then here at 735, we moved low from that low there, and it's just really strong trending market. So the mean reversing. So you have two. What is the market doing? That's what I always say to you. When you open up, what is the market doing? The market, as we said, into the open was trending. We may have a turnaround. We are literally less than 10 minutes into the cash open, but the trend from early in the day, from the Asian session, from the close of the US session, has continued to move as lower. And is as literally as I'm speaking, see that's moving. You would expect gold to have come back up on the back of the way the stock markets have reacted. And indeed, it hasn't. Interestingly, it hasn't really been impacted by the open. It's bounced up a wee bit, but these monumental all-time highs just a few hours ago, new all-time highs at 4,370. This is, as I said yesterday, and I've been saying for a while, be very, very careful trying to catch the top of the gold market. Here's a trend. It has got very steep, so people getting twitchy, understandably. There's 4,000. There was 4,200 just yesterday. I don't know, yesterday on Wednesday. Last time I did this was Wednesday 4,218, and here we are over 4,300 now into close yesterday, and this morning we've gone to that 4,378 zone. So and obviously that's doesn't look like any sign of cooling. It seems quite illogical, but markets are illogical. We've got to move up, and gold is bid. If we just I'll put another indicator on, but that, as I say, just don't try and catch the top of it. Silver also new all-time highs within a smidge of $54. Again, if we just look at the weekly moves on this, it's just been absolutely phenomenal. From down here at $17 back in 2022, not going anywhere for most of 2023. Big move during 24. We went to $30 sideways actually, but look at where we are now, $53. Panic. One would argue, but silver, industrial metal, as well as a precious metal, even though manufacturing remains moribund, there's still strong demand for silver in some of these high-tech industries as well. So off we go. The metals, palladium's the same, platinum's the same, and oil, the other key commodity, going in the opposite direction. So there we are, my friends. Just stay on course. Don't again, a lot of people, scalpers or short-term traders are afraid to, hold their short positions sometimes. I'm a scalper. I'm a 5-minute trader. I want to get out when I've hit my pips, I've hit my targets. You don't, if we see a strong trending market like we did this morning, the sign is, yes, we were. Let's go back to my previous layout, the one we were using. Yes, we were following the rules, and we got that little uplift here from 640 to the midpoint. Then we got the second target. But trust your instincts as well. This was crossing down, wasn't it? We said we'd rejected the 20 period, the midline of the Bollinger Band. So we had that cross there. This that's what we were saying, weren't we? The lines have been taken out. So that was our second one. See how we go. Take some of your profit off as it does touch the or breaks the outside of the Bollinger Band. So we had a touch, and obviously at this point we're looking for the for a turn in the stochastics, aren't we? With this particular strategy, but the trend has outran that. And look at the opening trades. So this is the 8 o'clock. This is the 8:05. Huge moves to the downside. So thank you very much. First sign of a turn, which we've got here. I'll be out now because we've got this turn and potentially possibly a week buy. But the move through 23,900 was significant. We produced new lows of the day, and that's what we are looking for going forward for the rest of the day. So 23,737 is our new low of the day of the cash session. So we plot that on now, and we move that down as that level either moves down or we bounce from there. The signs potentially here on the 5-minute that we may be moving up. 2-minute may have already crossed. There we are. The 2 minutes had a bit of a cross, but look at it; it's very weak. So we went up, and now we come back down again. So don't get too jumping in too early to try and buy that, because that's suggesting it's crossed. It may not. Obviously, the trend remains to the downside, but whether you banked your profits immediately in its first 10 minutes, some significant profits there on the just on the open. You can go and enjoy the rest of your day. Or you have a higher time frame trader. You're the hourly trader, but he would have been short from here from 7 o'clock last night, and he's still short. Stop loss would have been there, and his stop loss is probably there now. And see how this one finishes. So he's very much in the money, the hourly trader. Overnight on the Asian session. So I'm going to wrap this up now, guys. I've been here nearly an hour, 45 minutes this morning. And be careful out there. It's another Friday. Remember what happened last Friday. But the trend is very much with you. And as Aldo has written here, the world and chaos and gold to the moon, as always. Well, indeed, very sanguine comments, Aldo, my friend. Let's just leave you with the gold market. New all-time high, 4,375. Be very careful trying to bet against a short in the gold market, my friends. Okay, see you on Monday. Start of the third week of let's look at next week while we're here. The third week of the fourth week, isn't it? We started here. Fourth week of October. We've got 2 weeks to pull around. We've got a very losing October at the moment. So apply. Let me just check out the filters. I'm putting the big ones. Obviously, with the US still in shutdown, obviously inflation, then non-farm payrolls, the durable goods, retail sales, all of that will not happen next week. PPI. So it may suddenly come to an end, but so look elsewhere for data. And obviously the main thing that the markets have got to jump on during next week is the earnings season as well, as we move away from the financials. Aldo, my friend, have a great evening. Go to bed, my friend. Okay, I'll see you later. I'll see you later on in the day. Take care. So Chinese data on Monday, a big raft of data after a holiday. It's the Diwali holiday, the Festival of Light for our Hindu friends. So enjoy your holidays if everybody's watching. From there, inflation on early to kick off from New Zealand. Still, quite hot, closer to 3% than it is to 2%, isn't it? 2.7% in New Zealand. PPI data from Germany also on Monday. Tuesday, we see the inflation from Canada. It's probably the biggest data of the week. More Fed speak. Chris Waller, potential Fed chair coming up. One of Trump's men, shall we say. CPI inflation from the UK on Wednesday, and Europe is in about an hour's time. So watch that as well. New governor speaker from the Bank of England as well later on Wednesday. Thursday, obviously the jobs claims aren't going to come out in the US. Retail sales from Canada, and Friday retail sales from the UK, and the PMIs start as we run into the final end of the month. So we got some manufacturing and services PMIs on Friday as well, and the consumer and inflation expectations from the very influential University of Michigan on Friday as well. But a dearth of US data. Obviously, yesterday, back to politics, we've got Zelensky meeting Trump in Washington today after Tomahawk missiles, long-range Tomahawk missiles. There was that very, very surprised call with Putin yesterday from President Trump. He's really on a roll, isn't he? Apparently, the call went very well, but Trump always says that, doesn't he? But scheduled to meet in Erdogan's, but in Hungary, possibly next week as well. See what Zelensky comes away with today. If anything, perhaps he's agreed with Putin that he won't get his Tomahawk missiles, and that's why Putin's agreed to meet him. We'll see. But he's ignored him, didn't he? And he got all the pomp and ceremony of getting onto US soil. Remember, Putin would have get arrested if he'd gone to, over 50 countries in the world. But Hungary, South Africa, and the Americans don't accept that. And so he managed to land in Alaska, met the president, got all that US flyby, and nothing. Trump came away with nothing. But obviously, since then, he's had his big major coup of the Hamas-Israel ceasefire. I'm not going to call it a peace deal because that's all it is at the moment. Still people being killed. So anyway, next week, less data, PMI start. We've got some inflation data, some retail sales from UK and Canada to get our teeth into, but watch what the central bankers have to say as well. And we're another week closer to the Fed decision as well at the end of next week. So take care. I will see you all again on Monday. Have a great day. And Aldo, you have a great day as well. Have a good night and go to bed, my friend. I'll see you all again on Monday. Stay safe, and may the pips be with you. Let me just leave you with that mighty that mighty gold market. We're actually down, but it's all relative, isn't it? Having had such a rally to the upside, and the DAX, the other one we were trading earlier, the low continues. So it's just in that last 10 minutes we've gone even lower. So 23,700 now. So 200 pips just from our pre-market low from 23,900. Lots of money to be made on short in the DAX today. Down we go. All right, take care, everyone. See you soon.